Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 25th of September. And disappointing in the air, we've basically double topped with the late July peak around the 7750 area. Didn't get up to that May resistance line, projection 7780. And basically it looks like we're now in a rising wedge, which could be a negative. End of day close back below the 200-day line, and the broken February resistance line at 7640 could take us down to the 50-day line area at 75.25. But at this stage, not looking for anything worse than that. And obviously, if we don't close below 7640, we may get a respite from a potential pull to the downside. Onto the DAX, which I presume will be in a rather worse state than the FTSE. Yes, it is. Here we've broken down below the 200-day line for 15,500. That means we're risking a move to 15,100, which is a May support line projection. We've got the 50-day line there, 15,900, and we failed there 3 times since the beginning of last month, so not surprising that we're rolling over here. The only problem with this is that it looks like a rather extended rollover that we've had basically since the start of the year, if you look at it that way. So that's the opposite of a source of formation. But 15,100 while we're below 15,500 is the risk there. On to the Dow, and here the market heading very close to it now. The 200-day line there at 33,800, and that's also the area of the support for July and June around that level. If we break back below that, obviously then 32,500 and May support could be on tap there. But the problem here again, as in the case of the DAX, that the charting formation does not look good. We've had a double-shouldered head and shoulders, so double-shouldered going into the rally in July, and then double shoulder on the downside. That gives the pattern more credibility, and as I said, that suggests that there is the risk of 32,500 now if we break back below the 33,700 area. Moving on to Bitcoin, where we hope the situation will be a little bit better than the indices at the moment. Trying to find support here at that uptrend line there from January, but in a way it's almost mirroring what we're seeing on the indices. The support there for post-June is 24,900. That's got to be the risk at the moment while we're below the 50-day line at 26,900. RSI is also pulled back below neutral 50 and failed in the low 50s, which tends to be a negative signal. All we're missing now, rather, is the 200-day line to start falling, and then that really could bring this market down. Worst case scenario at the moment is a break of the 25,000 area, taking us down to 23,100 and a March support line projection. Onto the stocks, and the reason I'm including Arkle again is because the shares went up and they stayed up, which is always very nice. We broke a line of resistance there from back in December. We broke the 200-day line at 0.44, and above that we've been looking for a best case scenario target as high as 0.9 pence. And that could happen as soon as, well, not the end of next month, but maybe the end of November, that kind of thing. But you never know with these things. If it does keep going, then it may be much quicker than that. So end of October is possible. But it is interesting there that we have not retraced at all on Friday's move. Moving along to the situation with Arrow Exploration, where the shares have been dancing around the 20 pence area, but a nice bounce today. Minor bear trap on Friday from below the 50 and 200-day lines at 19 pence. We're hoping now that the shares don't go back anywhere under the 19 pence level again. Initial target here up to 23 pence and a June resistance line projection, and up to as high as 27 pence by the end of next month if we remain on the right side of those 50 and 200-day moving averages. RSI rebound above neutral 50 is another positive there. On to Cornerstone, which I've covered quite a few times, and the shares have not let me down yet, apart from that little gap down that we had back in August. V-shaped bull flag breakout, unfilled gap to the upside in the middle of last week, so that's a double win there. And that suggests that our target there at 16 pence should be hit hopefully as soon as the end of this month. Moving on to Chill, which I covered yesterday. It's managed to rise 5% today. It looks as though there's a bit of a turnaround here coming, just near the 50 and 200-day moving averages, around 5 pence. Want to see an end-of-day close above that to give us up to 8 pence as soon as the end of next month. EDR Minerals, got to mention the Daily Mail, which is obviously very nice. Here we've had a bear trap rebound from below July support 0.27. Above that, we're looking for up to 0.6 pence by the end of next month. The key here, I suppose, well, the two keys here actually. First is the bullish divergence. So we had lower lows for September, but higher RSI trace. And the other thing to note is the way that the 50-day line is now rising, and the rising 50-day line is normally the sign of a changing momentum, and that's why we're relatively confident, along with the bear trap and the bullish divergence, that we could hit 0.6 pence as soon as the end of next month. On to a stock with a rather higher market cap than I normally look at, but here we are with Gulf Keystone. Been watching this for a number of days, and we had a couple of false dawns, especially on the 15th there, so hitting the 50-day line. Also another one where we had the 50-day line as a block on Friday, but now we've broken through it comprehensively above 104, looking for up to £1.35 by the end of next month. So it looks as though the shares are finally on their way, but ideally staying above that 50-day line. On to Jersey, which I think I've also covered quite regularly in the recent past, and here shares have done what we wanted them to do, i.e. break through the 200-day line there at 206. Above that, we're looking for the shares to hit 230 by the end of next month. A stock which doesn't normally get covered here very much is OPG, or anywhere else actually, but thought I'd just look at it today. Here we've had a breakout through the 10 pence resistance zone. Above that, looking for 14 pence or more by the end of next month. The rally here actually started with a golden cross back in March, but obviously a rather slow situation. On to Orcadian, which is on the front foot again today by 5%. Interviewed the company last week. I thought it was an excellent interview, not my bits, but the bits from Steve Brown. And here it looks like we're in a mid-move consolidation. Hopefully that'll be enough while we remain above the 13 pence area to take us up to as high as 25 pence by the end of next month. On to Prospex, which has been down in the dumps for quite some time. We're hoping that finally it will emerge from the dumps. A bit of bullish divergence going into September, but the share still failed the 50-day line, so that shows us that we want to see not only a break of the 50-day line around 6 pence, but also a higher low above that level to then take us back to maybe 10 pence over the following 1 to 2 months, maybe as soon as the end of next month, if we get that break through the 50-day line. On to a stock which has not had any problems in rallying at all, and that's Physionics. Here we can see a massive V-shaped bull flag now, and looking for the shares to break above the initial September resistance around 2.95 pence. If they can do that, we could be up to the next target, an April resistance line projection at 3.8 pence by the end of next month. And the more time we spend above the 200-day line there at 2.6 pence, the better for the bulls. On to stock which is, I covered a thing a while back, but it's finally broken out here, or is breaking out, Shield Therapeutics. And here got something of a handle in terms of the turnaround here, so that post-August resistance. Ideal scenario here is that we remain above the line I'm going to draw now, which was around 11.3 pence. Above that, looking for the top of a rising trend channel from back in November, as high as 15 pence by the end of next month. Good to see Tertiary Minerals rebound well today, and I think I interviewed this company earlier in the month. Unfilled gap to the upside and a break of a falling wedge started the rally there around 0.1 pence. Ideal scenario now is that we remain above the 200-day moving average and head up to 0.22 pence as soon as the end of next month. The worst case scenario, I suppose, is that we have to test the 50-day line around 0.1, but hopefully we can get away with that and stay above the 200-day moving average. A stock which I don't really cover, but here it is today, Tribal, and here, nice turnaround here. It's a bear trap island reversal, so we gapped down in March and gapped up in August and again this month. Above the August resistance, which is basically neckline support now, 47 pence, looking for up to 68 pence, and I would have thought that could happen by the end of this year. On to Tekcapital, and here it looks like we're shaping up with a V-shaped bull flag, or a U-shaped bull flag, which is nice. Good support there at 12 pence. Above that, looking for the combination of the 200-day moving average and that May resistance line at 14.5 pence over the next couple of weeks. Finishing off with Transense, and here the picture is one of a gap to the upside, rising trend channel heading towards as high as £1.40, and we're hoping for that as soon as the end of next month, given the gap to the upside and new highs so far today. That's it from me today. More updates tomorrow.